VWRL, Vanguard's FTSE All-World ETF. One ETF to rule them all. VWRL offers simplicity and global diversification all in one fund for a low cost. What more could you ask for? In this video, we're going to do a deep dive into what makes the FTSE All-World ETF VWRL an interesting option. Please remember, at iQinvesting, we are not professional investment advisors, and this video is not a recommendation. If you want to invest in this fund for yourself, then be sure to do your own research. We're going to discuss all of the benefits of the ETF whilst looking through Vanguard's website and analysing the data. Make sure to stick around to the end of the video where we discuss the possibility of an even better global equity tracker. Let's get into it. What makes great things great? Cristiano Ronaldo. When playing football, you tend to have certain players that are good at certain things. Some players excel at dribbling the ball, some are great at passing, and some have an excellent finish. But Cristiano Ronaldo, he has it all. You can't boil down Ronaldo's greatness to any one of these singular skills. It's the fact that he has a combination of all of these skills that makes him one of the greatest players on the planet. These skills can also be transferred over to the world of ETFs. You can get some funds at a low cost, some that are simple, and some that offer global diversification. But the best ETFs have it all. VWRL certainly has it all. When you combine all of these characteristics, you end up with an all-in-one solution that we believe to be top tier when it comes to ETFs that are available in the UK. To find all of the information that you need to analyse this fund properly, all you need to do is go to Vanguard's UK website. From the homepage, simply click on what we offer, then click on ETFs. You can then scroll down to the global section, where you'll find the FTSE All-World ETF. This has the ticker symbol VWRL. Click on it to learn some more information about the fund. You will be taken to the overview page, which includes some key facts about the fund that are useful for getting a general summary. Just bear in mind that these upcoming metrics can vary on a day-to-day basis. The values that I'm going to be reading are accurate as of February 2021. The market value is around £81. This is the amount you will have to pay to buy one whole share of the ETF. On Vanguard's platform, you have to buy whole shares as they do not offer fractional shares. This means that if you wanted to invest £100 in this ETF at the time of recording, you would end up with one whole share and then £19 cash left over in your Vanguard account. You can choose to invest this £19 how you like, but just bear in mind that it will remain uninvested unless you choose a fund to invest it in. Some other trading platforms, such as Trading 212 and Freetrade, allow you to buy fractional shares. This means that if you wanted to invest £10 into this ETF, then you could. You'd currently get about 0.12 shares. Another key factor is the number of stocks that are held within the ETF. This currently stands at around 3,500. This means that by investing in this one ETF, you're holding a small part of around 3,500 companies. That's plenty of diversification. We'll explain why diversification is so important in a moment. Let's check the fees, which is arguably the most important factor. The ongoing charge is 0.22%. This is the amount that you have to pay each year to hold the fund. So, if you had £1,000 invested, 0.22% of that, which is £2.20, would be taken away each year to cover the management fees of the fund. Even though there are other funds on Vanguard's website that have a cheaper expense ratio than 0.22%, this is still cheap for a global tracker. On the overview page, there is a short paragraph explaining the objectives of a fund. Here, it explains that the fund is passively managed and it seeks to track the performance of the FTSE All-World Index. If you want to learn more about this index, I'll leave a link in the description to a FTSE Russell fact sheet for the index. But in summary, the index measures the market performance of large and mid-capitalisation stocks of companies located around the world. It includes approximately 3,900 holdings in nearly 50 countries, including both developed and emerging markets, and covers more than 95% of the global investable market capitalisation. VWRL holds 3,500 out of the 3,900 stocks that make up the index. This gives you superb global diversification. But what exactly is global diversification? And why on earth is it so important? To start answering this question, let's break down the term a little and first explore what diversification means. Diversification, in investing terms, refers to owning a wide range of distinct assets. This means that you will not expose yourself to the risks associated with a particular stock or sector. To explain what we mean by this, meet Harold. Harold is a huge fan of StockX. In fact, he loves StockX so much that he invests 100% of his savings in StockX, as they've performed so well over his lifetime. When the times are good, they're really good. Harold loves life. But then one day, tragedy. The CEO of StockX's company fell off a cliff in a freak accident. Don't ask me why he had his swimming trunks on. Then, lightning struck on the company's headquarters, setting fire to the building and destroying everything. The company folded. The stock price fell to zero. Harold may look happy, but he's good at hiding the pain. Since Harold was 100% all in on StockX, he was fully exposed to the risks of investing in that particular stock. This is what investors call concentration risk, and it doesn't just apply to singular stocks. Some investors choose to focus on stocks from particular countries. However, even if you invested in hundreds of stocks in Germany, then there was a zombie outbreak there, you'd be pretty screwed. These cases are obviously a bit far-fetched, but you get the point. We need to diversify to reduce our exposure to a particular stock, sector, geographical location, or asset class. In fact, the FTSE All-World ETF holds thousands of stocks in a variety of market sectors from a range of countries all around the world. Yes, it doesn't include asset class diversification, but if that's something that you'd want to do, then you can simply add bonds to your portfolio. Just be aware that your expected returns would decrease. Normally, to achieve this magnitude of diversification, you would have to hold a wide range of ETFs. However, this is what makes VWRL so useful. You get amazing diversification all in one fund. So it is simple. Simplicity is quite frankly underrated in the world of investing. A lot of people go for complex strategies, trying to beat the market or squeeze an extra percentage point out of somewhere. But in most cases, investors end up hurting themselves by doing this, as portfolios can become difficult to manage and the strategies can be difficult to stick by, especially when times are tough. The FTSE All-World ETF is simple. You just have to invest in one ETF and then the fund does all of the legwork for you. End of. You have to spend less time worrying about implementing strategies and you get to spend more time doing the things that you love. So, back to Vanguard's website and we can look more into this diversification by clicking on the Portfolio Data tab. Here, you can see some characteristics of a fund, so be sure to have a look at them if you're interested. As you scroll down, you can see some information about the region exposure, and then more importantly, the market allocation for each country. The table shows all of the countries that the stocks within the ETF are located in. It also shows their relative weightings and compares it to the benchmark, which is the FTSE All-World Index that we discussed earlier. As you can see, over 55% of the ETF's holdings are located in the USA, whilst many other countries have a much lower allocation. This is down to the FTSE All-World Index being a market capitalization weighted index. The market capitalization, or market cap, refers to the total value of a company. The US economy has been booming over the past few decades, and it's filled with some of the world's largest publicly traded companies. This explains why it makes up so much of the global market share. Other countries, like Indonesia for example, have much smaller economies, and the publicly traded companies within them generally have a much smaller market cap. This is why countries like these have such a small market allocation. If the US economy starts to crumble, then the allocation to the US will decrease automatically. It would be replaced by other countries that are growing, working their way up the economic ladder. So, that's why when you hold VWRL, you don't have to worry about rebalancing every year or so. The ETF literally does it for you, which is great. As a side note, we've been asked plenty of times in the comments if these global ETFs should be held alongside other ETFs such as the S&P 500 ETF, VUSA, or the FTSE 100 ETF, VUKE. In most cases, it doesn't actually make sense to hold another ETF alongside a global ETF, for two main reasons. Number one, the companies held within the S&P 500 or the FTSE 100 for example, are likely already included in the FTSE All-World ETF. This means that you will literally be holding the stock twice. Number two, let's say you have a portfolio of 50% FTSE All-World Index and 50% the S&P 500 ETF. What you're doing here is essentially overweighting the US allocation. A quick bit of math shows that 77% of that portfolio is allocated to the US markets. That's around 20% more than the global market share suggests. Now don't get me wrong, if you want to hold more US stocks, then go for it. We're not saying that it's a bad thing. But in terms of global market cap, you will not be holding a truly globally diversified portfolio. Anyway, back to the website. If you scroll down further, you can view the market sector allocations. As you can see, the market sectors are well diversified, which we already know is a good thing. These weightings could change over time depending on the performance of the stocks held within the ETF. Finally, you can scroll down to see the holding details, which shows the weightings of each individual stock within the ETF. This first page shows the top 10 stocks that are held. If you add up the weightings on this first page, it shows that the top 10 stocks make up around 14.5% of the entire ETF. This means that the remaining 3,500 stocks make up around 85.5% of the ETF. Again, this is the effects of a market capitalization weighted index that makes the ETF very top heavy. So we can clearly see that the ETF is globally diversified and it holds thousands of stocks over various market sectors. Now, this level of diversification isn't exactly easy to achieve, so it of course comes with a cost. But this is what also makes VWRL such a great option. You get all of this for the low cost of 0.22% per year. When comparing to some of the other ETFs on Vanguard, this might not seem great, but remember that these ETFs don't give you complete global diversification. It's important to mention some of the other costs that are associated with holding ETFs on Vanguard's UK platform that aren't immediately obvious. To find out more about this, you have to scroll to the top of the page, click what we offer, then click our fees and charges. If you scroll down further, there is a breakdown of the fees you will be paying when investing with Vanguard. Here, it explains that you will pay account fees of 0.15% for investing with Vanguard. Next, there is the fund management cost or ongoing charges, which we know is 0.22% for VWRL. Then, there are the fund transaction costs, which are the costs associated with the buying and selling of shares that Vanguard has to do to build and balance the ETFs. If you scroll down, you can see the one-off costs that cover the bid to ask spread when you purchase a share. To find out exactly how much you'll be paying to invest in VWRL, click on the link which says Vanguard Full Costs and Charges. This dense document shows all of the hidden charges associated with Vanguard funds. If you find the FTSE All-World ETF, you can see that you pay 0.22% in ongoing costs, 0.03% in transaction costs, 0.05% in one-off costs, and then the account fee of 0.15%. This totals up to 0.45% per year. As we said, these costs may not be immediately obvious at first, so it's important that you make yourself aware of them. Don't worry if you feel like you've been getting duped, because these fees are automatically taken away from the performance of each fund. As we mentioned earlier though, there are other ways to invest in VWRL. On Trading 212 for example, you can invest in VWRL free of charge. However, it's not quite as free as you may think. On Trading 212, the bid to ask spread is often a bit wider, as they don't have access to the same money makers that paid services like Vanguard use. Back to Vanguard's website, and the next tab, Distributions, shows the recent dividend payments that have been distributed. The current yield is 1.47% per year at the time of recording. These dividends are paid out as cash, so you can choose to withdraw that cash, use them to pay management fees, or use it to invest in more funds. On other platforms, such as Trading 212, you may get access to other versions of VWRL that automatically reinvest the dividend payments, such as VWRP. This could be a better option for some investors, as reinvesting dividends can be massive for portfolio growth. However, if you have a large portfolio and you pay tax on your dividends, this can make them harder to track, and could cause you a nightmare when trying to put together your tax summary. The fifth and final tab is cost and minimums, which explains the cost of the funds that we've already covered and the minimum investment amounts. If it's your first time buying a fund with Vanguard, you'll have to make a £500 one-off purchase, or set up a £100 monthly direct debit. Just bear in mind that this is for initial payments only. So, if you already have a Vanguard account open, you could just buy one share if you like, which is currently valued at £81. And of course, fractional shares may be available on other investing platforms. So, we've just about covered everything that you need to know about the FTSE All-World ETF VWRL. We've shown that the ETF is a great all-in-one option, providing global diversification and simplicity all at a low cost. But there's still a huge question that we've not yet answered. Is there a better global equity tracker on Vanguard's UK platform? Well, there certainly is a great contender, and it's the FTSE Global All Cap Index Fund. At a glance, the fund holds almost twice as many stocks as VWRL, and includes small cap stocks, but it has a slightly higher expense ratio. So, is this a better option? Well, I'm going to be making a video soon on the FTSE Global All Cap Index Fund. So until then, you can smash the like button, hit subscribe, and follow us on Instagram for more investing based content. As always, thanks for watching.